The S&P 500 is currently trading at $7,498, down 0.14% on the day, amidst a complex web of macroeconomic signals that are leaving investors questioning the direction of the market. This indecision is reflected in the mixed performance of various asset classes, with the VIX, a measure of market volatility, standing at 16.64, down 2.4% today. Meanwhile, oil prices have risen to a 6-week high due to escalating U.S.-Iran tensions, with Brent oil up 2.36% to $96.29 and crude oil up 1.91% to $88.49. These developments underscore the challenges investors face in navigating a market where geopolitical events, monetary policy, and earnings reports are all vying for attention. In this context, it's essential to understand the broader macroeconomic environment. The current regime is characterized as neutral or mixed signals, suggesting indecision among investors. This regime is marked by a lack of clear direction in the market, with different asset classes moving in various ways. For instance, while the S&P 500 is slightly down, the utility sector is up 2.25%, and the energy sector is up 1.2%, indicating sector rotation and a surge for yield or safety. The yield curve, with the 10-year Treasury yield at 4.657% and the 2-year yield at 3.745%, suggests that the market is pricing in a moderate growth environment with some inflation concerns. Delving deeper into the movers of the day, SMCI, or Super Microcomputer Incorporated, is up an impressive 19.84% to $30.56, making it one of the top gainers. This move is particularly noteworthy given the current market environment, where technology stocks have been under pressure due to concerns over growth and valuation. SMCI's performance today can be attributed to its strong earnings report, which beat analyst expectations, and its position in the sector, which is seeing a rotation towards value and away from growth. The company's peer group performance is also relevant, as it outperforms most of its peers, indicating a specific catalyst or strength in SMCI's business model. The technical picture for SMCI looks bullish, with its relative strength index, RSI, at a level that suggests it still has room to run, and its one-month trend indicating a strong upward momentum. Another stock that caught attention today is ARWR, or Arrowhead Pharmaceuticals, which is up 19.03% to $88.70. Like SMCI, ARWR's move is significant and reflects a strong response to its recent earnings report and possibly sector rotation within the healthcare space. The move in ARWR, however, is also accompanied by a bearish signal in the options market, with a put/call ratio of 2.65, indicating that some investors are hedging their bets or taking bearish positions, possibly due to valuation concerns or the volatile nature of biotech stocks. This contrast between the stock's price action and the options market sentiment highlights the complexity of analyzing individual stocks in a mixed market regime. The performance of these stocks, along with the broader market and sector trends, underscores the importance of individual stock analysis over broad macro calls in the current environment. While the overall market may be range-bound, specific stocks and sectors are experiencing significant moves based on their unique catalysts and positioning within the market. The correlation between assets is breaking down, meaning that traditional relationships between different markets and sectors are not holding as strongly, making it challenging but potentially rewarding time for stock pickers. Now, looking at the cross-asset signals, Bitcoin is trading at $65,592, down 0.74% on the day, reflecting a cautious tone in the crypto market. The price of gold at $4,128, down 0.57%, indicates a mixed sentiment towards safe haven assets, possibly due to the conflicting signals in the economy and the geopolitical landscape. The oil price, as mentioned, is up, signaling concerns over growth and inflation. The yield curve, with its current shape, suggests that the market is expecting moderate growth with some inflation, which could impact equity valuations, especially for long-duration assets. The sector rotation signals also provide valuable insights, with money flowing into utilities and materials, suggesting a defensive rotation and possibly a surge for yield in a mixed economic environment. The supply chain implications of these moves are significant, as they can ripple through the economy, affecting various sectors and companies differently. For instance, the move in SMCI could have implications for its suppliers and customers, potentially benefiting those in the technology sector who are positioned for growth and value. Before diving deeper into the implications and the action plan, it's crucial to consider the broader market context and how these moves fit into the larger economic and geopolitical picture. The mixed signals in the market, combined with the upcoming catalysts such as the FOMC meeting and earnings reports, suggest that investors need to be prepared for various scenarios and have a strategy that can adapt to changing market conditions. The move in oil prices, for example, due to U.S.-Iran tensions, not only affects the energy sector, but also has broader implications for inflation, growth, and monetary policy. Similarly, the performance of stocks like SMCI and ARWR, while driven by specific company news, also reflects broader sector trends and the search for value and growth in a complex market environment. Understanding these dynamics is key to navigating the current market successfully and making informed investment decisions. The next part of our analysis will delve into the forecast for the market, the top movers, and an action plan for different types of investors, considering the mixed signals, sector rotation, and the overall macroeconomic environment. Now let's zoom out to the bigger cross-asset picture, analyzing the relationships between different asset classes and what they signal about the current market environment. The price of Bitcoin is $65,592.28, down 0.74% today, which may indicate a slight decrease in risk appetite. Meanwhile, the price of gold is $4,128.30, down 0.57% today, suggesting that safe haven demand might be easing. The 10-year Treasury yield is 4.657%, up 0.63% today, which could imply that investors are becoming more cautious about the economic outlook. Looking at the cross-asset correlations, we see that the combination of a rising 10-year Treasury yield and a falling VIX, which is currently at 16.64, down 2.4% today, has historically preceded a period of increased market volatility. This is something to watch closely, as it could impact the performance of various assets. Additionally, the price of oil, currently at $88.50, up 1.92% today, is sending a mixed signal. On one hand, it could be a growth signal, but on the other hand, it might also contribute to inflationary pressures. Moving on to sector rotation and supply chain dynamics, we observe that the best performing sector today is utilities, with a gain of 2.25%, followed by materials, up 1.44%, and energy, up 1.2%. This rotation suggests that investors are seeking safer, more defensive sectors, possibly due to concerns about economic growth. The supply chain ripple effect is also worth considering, particularly for the featured stocks. For instance, SMCI's move could impact its downstream customers, such as data center operators, and its upstream suppliers, like semiconductor manufacturers. In terms of forecast, our analysis suggests that the next 2 to 4 weeks will be crucial in determining the market's direction. We have 3 possible scenarios. A bull scenario with a 40% probability, where the S&P 500 could reach $7,874 to $8,099, driven by a dovish Fed surprise or strong earnings. A base scenario with a 45% probability, where the market consolidates around $7,349 to $7,724 as investors digest recent moves, and a bear scenario with a 35% probability, where the S&P 500 falls to $6,749 to $7,049 due to hawkish Fed comments or disappointing earnings. Key support and resistance levels for the S&P 500 are $7,124 and $7,874, respectively. Before the action plan, here are the 3 assets getting the most attention in markets right now. SMCI is trading at $30.56, up 19.84% today, driven by strong earnings and sector rotation. The RWR is at $88.70, up 19.03% today, due to positive news on its pharmaceutical pipeline. Meanwhile, BXBL is down 23.85% at $6.10, likely due to disappointing earnings or sector rotation out of its space. For an action plan, we recommend that aggressive investors consider SMCI, given its strong momentum and potential for further growth. Moderate investors might look at PDBC, a commodity ETF that provides diversified exposure to the sector, which could benefit from the current macro environment. Conservative investors, focused on capital preservation, could consider JEPI, a low-volatility ETF with a covered call overlay, providing income and reduced downside risk. Tools like TradingView and Wealthfront can be useful in implementing these strategies. In conclusion, the current market environment is complex, with mixed signals and sector rotation underway. By analyzing cross-asset relationships, understanding supply chain dynamics, and considering different scenarios, investors can make more informed decisions. Whether you're an aggressive, moderate, or conservative investor, it's essential to stay informed and adapt to changing market conditions. Consider using tools like Copilot Money or Moomoo to stay up to date and adjust your portfolio accordingly. This content is for educational and entertainment purposes only. It does not constitute financial advice. Always consult a qualified financial advisor before making investment decisions.